Hi everyone, this is Tio with John Hart Real Estate. We are here with Sevan. Sevan, please introduce yourself to our audience.
Sure. Thank you for having me, Tio.
Of course.
Hello, everyone. My name is Sevan Gorginian. I'm a trust and bankruptcy attorney, and I'm delighted to be here to answer some questions.
Awesome. So if you could tell the audience what types of bankruptcies we have, you could do, that would be great.
Sure. A primary focus of my practice is in the area of bankruptcy. The current things that are happening right now with respect to the bankruptcy cases, which are starting to slowly tick up, is the defaults people are experiencing with the SBA loans. Specifically, it's the EIDL loans, the Economic Injury Disaster loans. So as I was mentioning to you earlier, a lot of the calls I'm getting is people that have used that money to either purchase real estate or to create an ADU or to buy themselves Teslas. I wish I was kidding, but I'm not. So those are the ones that I'm dealing with right now. There is a way to get rid of the SBA, and those debts are absolutely dischargeable.
Got it. And let's just say we have someone who's interested in looking into filing a bankruptcy. What kind of paperwork do they need, or what should they do?
Sure. For the clients that are interested to file the bankruptcy, I've created a very streamlined office with the help of my very fabulous and wonderful paralegal, in which we make it very easy and very streamlined. The typical documents we need is essentially the last filed tax return, 3 months of bank statements, and there is the credit report. So we start there, and then it's pretty much that's pretty much it that we need at the moment.
Got it. And as far as the timeline, how much does it take, or?
Sure, we can have a bankruptcy filed. Once we get those documents, we can have it ready in about 48 hours. The client comes in and they sign. Once it is signed and the case is actually filed, a typical Chapter 7 case will last 3 months. Once we get to the end, all the debts are discharged and they get their fresh start.
Got it. And how is it going to impact their credit score? Because some people are worried it's going to ruin their financials and credit score.
That's a great question. And it's pretty funny because every time a client comes and they say, how is this bankruptcy going to affect my credit score? I remind them that they are pretty much 6 months behind on all their payments already, and they have a repo. So I tell them, your credit score is already in the trash. So the bankruptcy is not going to ruin it that much. But what people don't know is there's this impression that if they file a bankruptcy, my life is ruined for the next 10 years. It's actually not how it works. Once the case is over in about 90 days, about 3 months later, the credit report will be updated. There's a big difference between the credit report itself and the credit score. The credit score is run through an algorithm, which it's called FICO. And the credit score looks at the credit report and then it gives you a score. Most people just look at the score. So the point is, once the bankruptcy is over, the credit report is actually updated and it says no more late payments, no more red boxes, so there's nothing. And when the FICO algorithm reads it, it says this is a clean report. So people actually have higher credit scores within about 6 months after the bankruptcy is filed, which is counterintuitive because it's, people think my credit score is going to be low. It's not. I have clients in the 650s, 680s, even having a bankruptcy notation on the credit report itself.
Very interesting.
Yeah.
Okay. Awesome. And besides the bankruptcy, do you do trust as well, or?
I do. So I also do estate planning, and I started it probably about a year ago. Once I hired someone, I was able to free up more time. And similar to my bankruptcy practice, I was able to create a very streamlined process to help the clients quickly set up their estate plans, especially their trusts. So I started to do that more, and fortunately, it's been pretty good, and I really enjoy it.
Awesome. What are some benefits of doing a trust or creating?
That's a very good question. I think one of the most common questions that comes up is, what's the difference between a trust and a will? So here is the way I explain it to people, and it helps people to think of the situations that can come up. I want you to imagine if the house is in, let's say you're married, okay? If the house is in your name, you just bought a house, and it says Tio, I forgot your last name.
Abramian.
If it says Tio Abramian,
Yes.
But you're married, God forbid, knock on wood, you die tomorrow, your wife will not be able to quickly get that property. And I had this happen to one of my clients because people think, well, I'm the surviving spouse in California, it's community property. It is true, your wife will get it, or your significant other spouse, they will get it. But because their name is not on title, that property will now have to go through probate court, and you have some, man or woman wearing a black robe, and you have to prove to them that I'm the spouse. And then they will then administer what's called the probate and say, okay, we believe you, now you can get title to your name. That is such a ridiculous process, okay? So that's why people put their assets in a trust, because the title is no longer in your name. The title is held in a trust. And think about a trust, that's just a box. So now when you pass away, that's fine, you don't own the title. Whoever controls this box will be able to then sell the property held inside the trust. So one of the biggest benefits is it avoids the probate court process, which in my opinion is the biggest scam in America. Anyone who goes through it, it's really lengthy and it's very, very costly. So that's the biggest benefit. There's also a lot of tax savings component to it. The biggest one is you avoid what's called the capital gains tax for the beneficiary children. Just very quickly, if you buy a property for $100,000, you sell it for $300,000, there's a $200,000 gain. You'll pay let's just say a 20% tax on it. That's called capital gains. Yes, I know there's exemptions, 250, married, etc. I get it. But if you put the same property into a trust and it goes to your kids in 70 years, you bought it for 100, but when they take it out of the trust, at the time it's probably going to be worth $1 million. So it's a $900,000 gain. But when the property is transferred outside of the trust to your beneficiary children, the property value resets to the date that it comes out of the trust to your kids. So it's going to say $1 million. And if they sell it the next day, there is zero capital gains because there's going to be no gains showing. The fancy word for that is a step up in basis. That's, I think, one of the best benefits.
Got it. I think there was word to government wanted to get rid of the step-up basis. Is that?
Of course, government is always looking to take your money, and they recently did that with Prop 19, that avoided parents transferring to their kids without any increase in property taxes. So yes, every time they try to either increase property taxes by getting rid of Prop 13, but they are always trying to see ways to avoid this situation where people are saving on capital gains. But fortunately, they have not been able to do so.
Got it, got it. And does anyone need a trust? Because you explained like there are lots of benefits.
So there's a lot of benefits, but not everybody needs a trust, okay? So the limit is, I think it just increased to $180,000, okay? If you have assets that are less than $180,000, you do not need a trust, okay? Because those assets are not going to go through probate court. So for example, my grandma lives in a elderly community. She doesn't have anything. She has some money in the bank account and basically some personal property. That's a prime example of someone that does not need a trust. So usually clients will come to me, I'm like, you don't need a trust. All you need is a will, to be able to determine who's going to get your stuff. So to kind of go back to my first question, the main question people ask, the main difference between a trust and a will. If someone only has a will that says, when I die, I give everything to Tio, which is not going to happen. Yeah, I know. If I only have a will that says that, and I don't have a trust, the will has to go to probate court. So you can't just do things with it. So the will has to be submitted to probate, and I told you everything wrong about probate. And because the judge has to determine whether that's a valid document, is that really Sevan's signature, things like that. So that's why people always have a trust coupled with the will. The reason why we do the will as a backup is the will is called a pour-over will, which means if I create this trust and I put everything inside it, if I accidentally forget to put my Chase bank account inside this trust, my will is going to say anything that is not in my trust, I am gifting it to my trust. So kind of like a pitcher pouring into a cup, the will captures all those other assets, puts it inside your trust to be distributed to the beneficiaries. So if you just have a will, that could be a problem, unless your assets are less than 180, then you're fine.
Nice. So let's just say one of our audiences wanted to get a trust. How quickly can you set up a trust?
Sure. We can have it ready within about 72 hours. We've established a procedure and a timeline that it's very efficient. I just did one this week. The client called me on Tuesday night and said, I'm traveling with my family. She was concerned about, something happening, obviously. So we had it ready in about 48 hours. If you go to my website, which I created myself using Wix, so I give myself credit, I have a lot of information on there, including my pricing. I think the pricing is important. You have to, obviously the client needs to know what it is. My pricing for the entire estate plan is $19.50, which includes your one house, and that includes the legal fee, the notary fees, and the county recording fees. There's no other hidden fees, and I would say my prices are probably half than my competitors. And the reason is because my overhead is low, because the software that attorneys use to create these estate plans is very expensive. I went ahead with a smart engineer and we created our own software that's in-house. So I don't pay any software fees. I pass on those savings to the clients, and we can have it ready immediately.
That's awesome. And I hear this question, it says, like people say, when should it be amended? What does it mean? And if you can explain it to
Sure,
the audience.
great question. Some people do have trusts already, and then they always ask, can you take a look at it to make sure it's right? Or when do I need to update and amend my trust? Typically, there's three main scenarios where I recommend for the trust to be amended. One, if you got a divorce, okay? The last thing married couples should do is to hold this trust together and share in the responsibilities, because you're getting a divorce and you already hate each other. And the last thing you want to do is be in control of something together. So what we typically recommend is to update the trust. And what we do is once the divorce is finalized, this is yours and that's yours, those assets will come out of that joint trust into your own individual trusts, and everyone goes their different ways. And then this trust is dissolved and canceled. The second scenario is once the kids become of age, like let's say 21 years old. So if you created the trust when they were younger, you very likely appointed what are called your successor trustees. Those are people in charge after you pass away, before the kids turn 18. I always recommend once the kids are 18 to replace those successor trustees, get them out, and just name your kids as the successor trustees themselves, and they will be the beneficiaries themselves. So that's the second scenario where the update I recommend to occur. And the third one is, a lot of parents don't think about this, but you need to think that if you have a trust, and if we created a trust where it says all your kids have to share equally, if you give an advancement on their inheritance during your lifetime, for example, you bought one of your kids, you helped them buy a house, you said, here's $100,000. I recommend to update the trust to make sure that kid gets $100,000 less when you pass away. Because it would be really unfair to your other children if we have to share this equally, but mom and dad helped Tio buy a house. So why do I need to share this net? The goal about the trust is to make sure the kids don't fight. So that's another way. If you help one of the kids, either help them with college, here's $50,000, you could just update the trust so it'll still be an equal distribution later.
Got it. Well, thank you so much. Anything that I missed that you would like to add?
Not necessarily. If you guys have any questions, just let me know. I really appreciate it. And as I was mentioning to Tio before, I follow him and his content. He's a really, really good guy, and you do have good content. So I appreciate it, and your clients are lucky to have you. Thank you again for having me. So
of course, thank you so much.
Thank you so much, Tio.
Of course, thank you.